So, I started a new topic in the previous class. Essentially, this is RBI, and I want to talk about two kinds of roles that the Central Bank of India, called RBI, Reserve Bank of India, plays. One is a regulatory role, another one is a promotional role. Now, the way I want to pursue this topic is, I want to first point out which are the traditional functions of a central bank that our central bank, RBI, performs. Traditional functions, which are common across countries, of central banks across countries. And later, I will tell you about the non-traditional things that our RBI has been doing. So, what I started out with is the traditional functions. And what I mentioned in the traditional functions of RBI, I mentioned two kind of traditional functions I mentioned one, currency authority. This is very traditional. Central bank of a country takes the responsibility of issuing currency, legal currency, which is called legal tender, which the citizens of the country use. In our country, we have a slightly different thing. Central bank as well as the Ministry of Finance does it. Ministry of Finance is concerned with the coins, and all rupees that you see, rupee notes, the notes above 1 rupee note are all issued by the Reserve Bank of India. In other countries, I think the entire coin and notes are both issued by the central bank, most countries. In India, there is a slight difference. So, the coins and 1 rupee note used to be the responsibility of the Ministry of Finance, how much of that amount will be issued. And the higher denomination notes above 1 rupee is the RBI. So, currency authority I talked about in details. The one that I started but didn't complete is the government banker business. Central bank is always the government banker, or what did I say, not banker, yeah, I called that government banker. So, central bank is always the government banker. That means most functions of the government, particularly the central government and also in our country state government, are carried out, banking operations are carried out by the central bank. Now, in RBI does that also. Now, what are the banking operations? These are the commercial banking operations. Like when we go to a bank, we open an account, we invest money there in fixed deposits, etc., savings account. So, there are demand deposit accounts, time deposit accounts. We put money there. We ask for remittance services. I have to send some money to my parents. Please issue a draft. Or I am applying for some scholarship job. I have to put in some money or appear in a test, prepare a draft. They also have something alternative to a draft called banker's check. So, there is various kinds of normal banking activities, which are commercial banking activities, which the central bank performs for the government, not everybody else, the government does. Now, beside that, this is kind of part of non-traditional functions to some extent, is that it looks after also, as a banker to the government, it looks after the central government in particular and also state governments. It looks after their temporary deficits, not a year-end fiscal deficit or budget deficit the way we talk about deficit in India, but temporary deficit, mismatches. It's called mismatch between funds coming in and expenditures going out. Because taxes, etc., which are sources of funds for the government, they don't come throughout the year. They are collected at various points of time. Half yearly collections hote hai, year-end collections hote hai. Like in rest of the months in a year, how would the government meet the expenses? So, often there are temporary mismatches between finances or funds coming in through taxes and other sources and expenditures flowing out. Now, this a new thing RBI started since the ad hoc treasury bills. I talked about ad hoc treasury bills in the previous topic. Ad hoc treasury bills were terminated, no more ad hoc treasury bills. They converted into them, all outstanding ad hoc bills were converted into something like a console. I told you about that at 4.64, I think 4.64 or 4.67 interest rate fixed forever. Ever means government will redeem them at some point. I don't know whether they have redeemed them already, but they are planning not to give a fixed life to it. Then government is under obligation to return the money to the public at that point of time when it matures. So it made it indefinite, made it open-ended for their convenience, because government finances were in a very poor shape. Right now it is in very poor shape also, and you will hear about that on TV and other places. So what they have done, they replaced that something called ways and means advances. I was talking about that. These are the advances that RBI gives to the central bank and the state governments. Ways and means advances. Ways and means advances. These are the money that the central RBI gives. Now, these advances, for when they are given to the central government, it doesn't have many restrictions. But remember, they are like a maturity of 3 months, and they do carry an interest rate. All right. And for temporary gas. But for the state governments, often there are certain restrictions. You will find that in Professor Bhole's book. Professor Bhole's book is in your reference list. Some copies are there in the 4th edition, copies are there in the library. I didn't buy the 5th edition. 4th edition, about 8-10 copies are there. You can find that out. Because for the state governments, they do number of things. They can give ways and means advances without any security, or collateral, which is called. That means they do not take any security valuable from the state government and just gives the loan. All right, trusting them at an interest. All right. Then so often they are given against a security like Government of India securities. Government of India sells bills, treasury bills, bonds, etc., which state governments invest. You have found that out from the previous topic. State governments do invest them. If they have not found that out, you will find that out soon. So state governments invest their surpluses there. So if they have bills, they can show that to RBI and take a loan out for 2 months, 3 months. All right. Then sometimes there are special advances given, special occasion, like the flood in Assam. I gave you the example. Assam state government can ask from RBI some special advances because the economy is in terrible shape, in the state economy in Assam, because of the floods. First, there was the political disturbance in some districts, 2-3 districts, and now there's a flood. Half of Assam is covered with water, was covered with water. Half of that big state. It's unbelievable, the size of the flood this year. And this is the second flood. The first one took place a few months back in the beginning of the monsoon season. So they can get for special advances. And then the interest rate. Interest rates RBI decides. Often these interest rates, when RBI is giving a loan or taking money from somebody, some banks, the interest rates are often determined by in relation to the bank rate. What is the bank rate? I am coming to that. Bank rate is nothing but the interest rate charged by the central bank when it lends to commercial banks. So this bank rate is also used here when they lend to the governments, state governments and central government. Bank rate is nothing but a formal expression for the interest rate charged by the central bank. In US, it's called the federal rate, I think, because it's called the Federal Reserve, that central bank. And the name of the bank rate is a federal. In England, it's called probably the bank rate. Okay. Now, apart from the ways and means advances as bankered to the governments, central government and state governments, it often provides overdraft facilities. Do you know overdraft facilities? Overdraft facilities are, my account balance has reached the minimum, but I need money. Now, bank has a discretion. If bank thinks, okay, like the State Bank, okay, this man I know for the last 24 years, he's been working here, he still has 10 more years to go. Okay. Now, he needs an overdraft facility because his account balance in the savings account, fixed deposit mein ho sakte rupiya hai, account balance has gone down to minimum balance. All right, give him overdraft facility, because on the assurance comes from internally is that at the end of the month his paycheck will come. So, we can deduct that amount. Every month his paycheck gets deposited here. So, there are overdraft facilities which are given to governments, state governments and central government. Like when their account balance has reached the minimum, they do not have cash. The government cash with RBI is 0 nearly, but government needs money. So, without issuing treasury bills, without going for ways and means advances, which they may have already taken a lot, who knows, then RBI can also give them some overdraft facilities. Depends, it is RBI's choice. All right. So, these overdraft facilities also, and then they are very short term, even shorter than 3 months, 2 months period overdraft facilities, and often there is an interest rate and a progressive interest rate that is charged on that. Overdraft is a very exceptional amount. So, suppose within 7 days you are supposed to return that money. So, 7 days you did not. So, your interest rate after 7th day, that is the 8th day and the 9th day, may jump by 2 percentage point. Now, how is the interest rate? Initially, the interest rate has been settled in relation to the bank rate, what it is presently. They have some formula. If bank rate is this, will be the ways and means advances interest rate. This will be the overdraft facility interest rate. Now, it can so happen that in an overdraft facility, they may have a progressive rate, like the way we have progressive income taxes. For low income people, there is no tax. Above a certain income, there is a 20% tax, 10% tax rate. Then it crosses another threshold, the tax rate increases to 20%. Then it crosses another threshold, it goes to 30%. Progressive, not the corporate profit tax rate. Corporate profit tax is a flat one. No progressive system they have. All right. So, this is another thing as a banker to the government it can do, which also available from commercial banks for public, you and me, in special cases. They know you well, your monthly income gets deposited here, there is an assurance, and now this man is in trouble, he needs an extra 10,000 rupees for 5 days, he does not have cash, bank can provide. It is the discretion of the manager, I think. Manager can decide and give that money to you. In fact, once it happened with me here, and one of my colleagues says, "Arey, ye chinta kyun kar rahe ho? State Bank को बताओ थोड़ा overdraft चाहिए, आप इतने दिन काम कर रहे हैं, आपको overdraft facility मैं समझ नहीं पाया, क्योंकि मैं overdraft कभी लिया नहीं. Fortunately, I didn't have to go through the overdraft, but that was available, he said. Okay. So, these are the things you learn. Next, it's a very important function. This is a traditional function also, not a non-traditional function. Some of these ways and means advances, etc., are kind of non-traditional in the sense other countries may not have them, but I put them here as banker to the government, put them here. Is that there is something called public debt. It's something which is also studied in economics. Earlier, it used to be called, it used to come under, I think, public finance. I don't know where it comes under. This is an area of economics, public debt. What is public? Here the word public is not our usage of word public. Public means government, remember, and private means non-government, everybody. Public debt is government, as you have found out from this discussion in this course, is often borrowing money, all right. So, it is creating a debt for itself. Now, this borrowing usually is internal. So, the large chunk of public debt is often internal. I borrowed from the RBI, I borrowed from the banks, I borrowed from the people by selling bonds to them, all right. I regularly borrow using treasury bills. They all create public debt. Now, this is called internal public debt, but public debt is just not internal. In 1991, before Dr. Manmohan Singh came to power, 1991 they came to power in June, I think, when before that, or around that time, I remember, after Rajiv Gandhi expired, the economy was in shambles, terrible shape. Now, they created a huge amount of external public debt also. They borrowed initially from Bank of England, they shipped gold, then they got a huge loan from IMF. And I remember IMF boss was Stanley Fischer, the famous economist from MIT. And Stanley Fischer visited India also, because when IMF gives a loan, they also come there. Top bosses do visit the country, advise the government what to do, what not to do. So I remember Stanley Fischer himself also came here. That's Stanley Fischer's macro book I use still. Fischer, Dornbusch, Fischer, and they have added another third author now. Starts, STARTZ. I use that book also. When I joined IIT, I used to use this Dornbusch Fischer book. Dornbusch expired, so they added a third. Dornbusch was also at MIT. When I was a student doing PhD, Dornbusch was very young, and he was a prolific writer. His main area was international economics, international finance, and we used to read these papers. I still have one of his books, written in 1980 or 81. Anyway, they're all MIT big fellows. They also hold positions in IMF, World Bank, etc., top positions. Now, IMF gave a loan, so India created a huge amount of external. Now, who manages all this debt? Government doesn't. Government makes the money, tries to make money, spending, it concentrates on spending. The banker or the financial consultant, if I put it this way, every company can have a financial consultant. The financial consultant or the debt manager is the central bank. So the internal debt, the various amounts they have collected at various times, the interest payments that have to be made, all track or accounting track or accounting information in an accounting framework, all right? कितने इंटरेस्ट इस साल देना है, एक्सटर्नल लोन में कितना देना है, वो यूरोप में जाएगा, ये जाएगा IMF के पास, डॉलर में पेमेंट होगा. इंटरनली कौन कौन कितना कितना रुपया गवर्नमेंट उधार लिया, कितना कितना पेमेंट कब करना है. Debt is maturing every point probably. All this management of public debt, internal or external, is done by the central bank. This is a facility again which, as an account holder in a commercial bank, I won't get it from the commercial bank. Commercial bank would never offer that service to me. I may have to hire a financial consultant to get that service. But as a government's banker, the topic is government's banker, all right, or government banker. These are like the normal duties or functions of the central bank. This is all I'm trying to say. All right? Okay? Fine. Now, finally, I come to the last point, which is very important in India. You know, in India, what we have been doing since 1950, 51, you took that Indian economics course from me. They have been following the Russian model of economic development, 5-year plans. Just now, today, they were talking on TV about the cabinet meeting regarding final approval of the 12th plan. Today, they were talking on TV. Today, cabinet meeting is there. They are going to take up more reform measures. They are talking about foreign direct investment to come in, a larger amount in pension, in insurance and all that, which they call big ticket reforms. And they are also talking about approval or finalizing the 12th 5-year plan, which Planning Commission drafts in consultation with various ministries and various organizations, but its final approval depends upon the cabinet nod. Now, these 5-year plans, what do they need? What do you see when you open a 5-year plan? What they have been doing, what they want to do, what should be the expenses in the coming 5 years, what should be the broad projects, policies that they should pursue, both at the micro level and at the macro level. So they require funding, financing, which every year the budget announces for 1 year only. Budget is essentially an implementation of those broad guidelines, plus some temporary things that may come up. Nothing else. Budget gives practical shape to the 5-year plans, which is a projection over a 5-year period, and a budget is an annual budget. So year to year they go monitoring, spending, allocating funds under various projects they have already announced in some sense. Broad policy guidelines are already there in the 5-year plans. So now you can imagine in a poor country like India, we have 5-year plans, ambitious plans. Where is the money going to come from? So this headache about financing the plans is a big issue. How do you finance your 5-year plans? एक तो है व्हाइट पेपर तैयार किया क्या क्या करना है, इंफ्रास्ट्रक्चर में इतना, अंडर इंफ्रास्ट्रक्चर एनर्जी विल गेट दिस, इरिगेशन विल गेट दिस, transport will get this, etc. All right. Then urban development, then social sector, Narega Wagara. Now, where is the money going to come from? Here again RBI is consulted. RBI becomes a financial consultant to the government of India. And also I think it does become a financial consultant to the state governments if they require their expertise help, expert help. All right. So you become an advisory body. You become an advisory body, a very important one for the government. So as government banker, it has to do so much. And I think this is true for all countries. Central banks do advise, very important. All right. Now I come to the ones which you are really interested in, the monetary policy stuff, which I am also interested in. Government banker or government's banker, I don't know how they put it, Professor Bhole's book, you can check. Now I have banker's banker, banker's bank. This is very interesting. Third point. Banker's bank. So all banks also have a bank. There is a very famous say in the monetary economics literature, the banking literature. This I need to come to, and but I will come to that later. But I can mention that. She was asking me, sir, what's the meaning of this expression? This is a very famous expression. Lender of the last resort. Here comes the lender of the last resort function, which central bank always had, just not new, under this heading called banker's bank. What is the banker's bank doing? Banker's bank means if bank needs money, where will it go? We need money, we take a loan from a bank against securities maybe. There are restrictions, specifications outlined which we have to follow. Fill out this form and get that certificate, you know. Even to get a job, how many certificates? Birth certificate, transcripts, reference letters, so many things. Now, to take a loan, you won't believe me how many papers you have to fill in. Now, when a bank needs money, central bank. So it is a banker's bank, very important. Now, this is the broad idea here. So lender of the last resort means bank have no money, it has misused its funds or misplanned its funds, given out too much loan, which is called creating credit, vis-a-vis the deposits it has mobilized or collected. Now depositor saying, give me my money. Bank cannot say, sorry, we don't have your money. What do you mean? ये जब होता है तो न्यूज़पेपर फ्लैश हो जाते हैं, टीवी में आ गया है, वो बैंक बता रहे रुपया नहीं है. Okay, so bank cannot lock and say, sorry, go home, I don't have your money. So in order to prevent that, central bank is there to help out the bank or banks who need cash. Sometimes the cash amount they need may be large amount, sometimes a small amount. Now, in order to ensure this role, lender of the last resort, as a central bank it lends to commercial banks, so nobody there is there to help them. Ensure that after the 1930s depression, they created certain rules of the game in the banking industry. One of them is the famous CRR. This came into existence. So as banker's bank, if I have to perform this role, then they created something called CRR, cash reserve ratio. This is essentially what they have created. Cash reserve ratio ensures the central bank has some of your money. So in case you are in trouble, I will use your money to help you out. Very smart. They didn't have that in the 1930s depression. So, when bank after bank and hundreds of banks started failing, one after the other, central bank had no cash to bail them out. A similar situation was coming up in the recent financial crisis 2008-9, and central bank had no way of bailing them out. The reason is their own creation called CRR, the deposit rates have, their CRR rates have gone down to near zero. They were so overconfident. They created it. Whereas a traditional country like India, who is very cautious, conservative, had a very high CRR here, 7%. Now, 7% of the total deposits is a huge amount of cash. Huge amount of cash, 7%. 1 percentage point CRR जब drop करते हैं, the liquidity increases in the banking system by thousands of crores. 1 percentage point. Suppose central bank announces RBI, we are going to lower the CRR from 8% to 7%. The liquidity, that is the extra cash now that will be available with the bank and no longer RBI will keep them, is to the tune of 20,000, 25, 30,000 crores. The total deposits is so much of the organized banking system I am talking about, not the unorganized sector. All right? And not even the non-banks. Non-banks are not directly under the regulation of central bank usually. They are trying to do that. There is no CRR usually there. Okay. So, now this CRR and is one of the methods they use to serve that function, lender of the last resort. So, what I do essentially, there are say 50 banks whose CRR money is with me. Now, one of them is in trouble. The 50 banks CRR money is a lot of cash. 7-8% is a lot of cash. So, for RBI to bail out one bank is no big deal, no pressure. This is a lovely thing they have created. Interestingly enough, the countries who discovered this or created this instrument, they do not follow that. I was reading up a monetary economics book a year back, a year and a half. Bank of Canada का CRR 0%. बैंक ऑफ कनाडा का CRR 0%. इस बार यूएसए में तो हाल खराब हुआ, यूरोप में भी हुआ है. सेंट्रल बैंक के पास रुपया नहीं है. And non-banks also started faltering, you know. All right. So, we will come to that, those issues are those are the issues probably she will deal with her in her thesis. All right. Now, as bankers bank, what else does it do? As lender of the last resort is one of the functions. CRR was created for that. What else? Okay. It provides short-term funds. All right. I will come to these repo, etc., becoming quite common. Short-term funds. It provides a centralized clearing facility. I told you centralized clearing facility. एक बैंक का चेक और एक के ऊपर क्लियर करना है. RBI हर बैंक का अकाउंट रख दिया. So it needs to just debit one account, credit another account, because this rupee is going to go from State Bank to Bank of Maharashtra. Or there is a check that arrived in state banks, deposit some account, where the check is written in favor of, I mean, the money has to be debited from say Canara Bank. All it will have to do, Canara Bank का account वो कम कर देंगे, वो check के लिए इधर में State Bank के अंदर रुपया डाल देंगे. Like a central room, you are sitting with a representative from each bank and you are saying, now ये आपके नाम में आए हैं, वो बैंक के साथ, वो उनके साथ contact करके कर लिया. Otherwise, it used to take a long time. So, centralized clearing facility is one of the things. Then they also provide, as bankers bank, remittance facilities. Remittance facilities are also provided. Bank wants to remit money. ठीक है? Suppose you are talking about, in the globalized world, you are talking about Punjab National Bank opening a branch in Toronto. Now, Toronto branch needs some cash urgently. Punjab National Bank will have to remit the money. How will it remit the money? Punjab National Bank cannot deal with foreign exchange directly. So, it will go to RBI. RBI will prepare the dollar draft send it to their, by electronically even they can send it these days, the money to the Toronto branch of Punjab National Bank. In fact, in Canada I have found there was a State Bank branch. They have, Indian banks have branches abroad now, some of them, the big ones. So they provide remittance facilities for banks. Imagine, we go to banks for remittance facilities. Banks require remittance facilities, usually foreign currency remittances, usually, I think. And there the central bank offers them, the remittance facilities. So Bankers Bank, it has number of functions. Some of them are very common sense functions, some of them are very important monetary policy functions, etc., like the ensuring the safety of public money in commercial banks. And commercial banks, yesterday we were talking about, you were reading, commercial banks create some sort of excessive private money by giving out too many loans vis-a-vis the deposit it has collected. Now the deposits require payments, interest payments, I don't have cash because I misplanned my investment activities. How to control that? A regulator need to control that. One function that the regulator performs is, regulatory function, is that the central bank of the country can keep CRR money. Then that money is there, safe deposit, safe money is there, which they can use, precautionary money, which they can use to bail out a bank. This is a common sense. She just started reading a recent 2012 paper. I started her reading on that, doing a PhD thesis, etc. So these are the regulators' functions, all right, Bankers Bank. Now you would really like it because this is the part which is coming to something called monetary policy. The one I'm coming to now, which is in the core of the central bank's monetary policy functions, the fourth item I'm going to talk about is controller of credit. This is very important. This is the one that we talk about in monetary policy, controller of credit. Credit is something which banks create, and there is something called credit multiplier. You all learned that, credit multiplier. I told you in the money supply topic, credit multiplier. You have a deposit, but one deposit in the banking system creates multiple amount of money. There is a multiplier. And also from within a bank collects 100 crores of deposits, okay? After CRR deduction, reserve money deduction, the excess reserve bank will keep for withdrawals, etc. From 100 crores, they can create 500 crores worth of credit. You wonder how do they do that? 100 crore तो मिला है, उनके अदर से डिडक्शन होके वो 100 crores से हो गया, maybe 30 crores, 40 crores. From 30 crores, 40 crores, they create a multiplier which is 8 times more, or 5 times more, or 10 times more. How? How is the credit created? Because these are the loans that the bank promises on the basis of that base money on which a part of the deposits they have collected as credit, and the credit multiplier is so large because this money when they promise to company A, company B, company C, company D, etc., various amounts of loans, they don't release the funds immediately. They open an account and they say every 2 months I will deposit 30,000 rupees towards that loan that we have sanctioned you. And in a 2-year, 3-year period, finally the 10 crores worth of loan will be given to you, not overnight. So with the base money, they gamble. They promise more loans. This is called credit multiplier from within a bank. All right. This is where the game they would have to play as a banker, good banker. And they also anticipate that some of the loans that they have given in the past will also mature and the money would come in. The problem starts if suddenly there is an extra hurry, a rush to withdraw funds by the depositors, which banks didn't anticipate. Second, the money that was supposed to come in from past loans didn't arrive on time. So there becomes a mismatch. Already I promised so much loan. I have to make the interest payments on the deposits. The deposits are withdrawing too much. I'm short of funds. Mismanage my finances. So a good banker knows how much loan it can create when deposits come in, what is the correct amount of deductions one has to make. So if deposit 100 crores, अच्छा CRR को निकालो, अच्छा ये निकालो, अच्छा वो भी निकालो थोड़ा, और थोड़ा margin रखो, अच्छा कितना पड़ा हुआ है, sir 30.5 crores पड़ा हुआ है, ठीक है, 30.5 crores, how much loan then can we give? This is they have to calculate. Here comes the role of the regulator also. A hungry, greedy bank will create too much loan and then cannot manage it. ठीक है, a cautious one will create lesser amount of loan. ठीक है, हमको थोड़ा प्रॉफिट मिलेगा, कम से कम ये लोन जाएगा, वापस भी आ जाएगा, इंटरेस्ट रेट रीजनेबल है, मेरा इनकम मिल जाएगा, डिफॉल्ट नहीं होगा. ठीक है. The other guy, another bank may act differently. So here comes, just like businesses, every business is run by a group of people. Is their mind, their expertise, their vision, their knowledge, all together decide how that business is run. ठीक है? Initial training all of you may have at IIT Kanpur, but then 4 people here, 3 people there open their own businesses, and you see the performance of the businesses are different because the minds involved in this business are different set of people. Similar for banks, same 32.2 crores or 5 crores, how they would manage their banking business in terms of loan creation, etc., depends, would vary from bank A to bank B to bank C. I need not go into it. So controller of credit at the macro level, when banks deal with public money, becomes very important for the government, and government does that through central bank. How to control credit? Suppose there is excessive credit getting created. Banks see the economy booming, companies asking for funds, or invest karo, and banks are just opening their lockers. And you know, in a capitalist society there is something called a bubble, and the bubble bursts tomorrow, crashes, loans are defaulted, banks are sitting on the street, doors locked, which is called bank holiday. There's an expression for that. You don't want that. So since banks deal with public money, ultimately it becomes the responsibility of the state to make sure that banks do not create excess credit, banks don't behave irresponsibly. Now how to do that? This is the kind of thing she was trying to read, I was trying to explain to her yesterday. How to do that? This is the job of a good regulator. So in a capitalist system, markets play a role, I understand. Markets have to be free, I understand that. But there is still a role for a regulator. In the monetary system, the regulator is the central bank. And controller of credit is an important function as a regulator the central bank has to perform. It's a very important function. Now traditionally, I'm doing traditional functions, there are 3 monetary policy instruments which control credit, which can control credit. These are monetary policy instruments. Control of credit. So I would just mention them, but I will take them up tomorrow. What are the 3 instruments? They are called monetary policy instruments or credit control instruments. One called bank rate, one is called bank rate, B is called cash reserve ratio, CRR, and C, they are called open market operations, OMO, open market operations. So one is bank rate, one is cash reserve ratio, another one, last one is open market operations. They are controller of credit or credit control instruments. Another expression for them are, they are very conventional or traditional monetary policy instruments. And why they are important, I told you. From the point of view of macroeconomics, it is important. From the point of view of regulatory functions, you allow your child to do whatever he wants to do in a free society, or you allow your child to be free with some restrictions, which is better. So the regulator's role is very important, and central bank is the regulator in the money market, of the money market. And these are all parts, banks, etc., part of the money market. So I'm going to talk about this bank rate, CRR, and open market operations, 3 instruments. credit control instrument, both from a macro perspective and also from the point of view of credit control instruments. They come under something called controller of credit. RBI is the controller of credit in India. The guardian of credit control means RBI is the main regulatory authority because it's the central bank. No big deal. Every country's central bank does that. RBI also does it. So now we are running out of time, only 5-6 minutes. I'd rather not begin all these things, all right, discussion of these items, and I do it tomorrow.